Hey guys, this is an excerpt from our live stream from Twitch about calls and puts. I want you guys to stick it out to the end because there's a free resource just for you guys. Everyone learns visually, so I hope you guys enjoy it. Let me start with my really simple explanation. So a call and a put, right? These are derivatives, meaning they're not actual stocks, they're versions of stocks. They derive their price from stocks, right? So we're going to circle the put with a red because it's a bet that it's going to go down. The call is green because it's a bet that it's going to go up, right? That's it. Think about it like this. You put something down, right? And then you call somebody, right? Before you had fucking flip phone, before you had, phones, you had handsets, right? You call somebody, it's up, you put it down, it's a bet that's going down, right? Hop sent us to some guy. Instructions are clear to cut it. That would be horrid. That would be like, you'd just be like,
Team America is now following.
Thanks for the follow, team. What are you investing? So call somebody, put down. Okay, you guys got it. Now we move on to different terms, right? We have a long, which is essentially a buy, and a short, which is essentially a sell, except that it's only when it's the beginning of the start of your position, so it's considered a to open. Meaning to open the position. Okay, so we're gonna color code it so that way you understand. Long is a bet that it's gonna go up. Okay, that's why it's green. Timing is most important with options. True. Beer, how are you? What if you call the honeys to get down? Oh my god. Oh man, I'm seeing so many sides of millennial now. Have your timing down or you're holding dog shit, basically. Call someone up to put them down. Is it really about a phone, calls and puts? Yeah. I mean, it's a really easy way to remember it, right? Call someone up, that's an up bet, put it down, it's a down bet, right? Where do these terms come from? They're called options, and they're products that you can trade on the stock market. They derive their price from from stocks, so they're similar in their linked in price, but they're not really the same. Okay, so we got a long going, right? It's green because it's going up, and a short is you're selling it, and it's a bet that it's going to go down. Right? You get money if it goes down. If it goes up, you lose money because it's a short. So really simple. Now see how they're opposite in color? So when you combine a down one with an up one, then it becomes a bet that it's the opposite, okay? But when it's the same color, then it's the same direction. Does that make sense? So we're going to zoom out on this. And you're going to combine them. So if we get a call that's long, right? Then it's still green because they're both green. A bet that it's going to go up, okay? Because these two are green. So if it's the same color, it's going to go up. If we do a... Crap, that doesn't work. Because a short put is a call, is a bet that's going to go up. Well, oh well. This is a cheat sheet. Whatever. Okay, so if it's a short call, short put, actually, there we go. Short put, it's a bet that it's going to go up. If it's a, and you keep combining them, and they're all different bets. They call me six figure for nothing. You got six figures? You want to give me those six figures? When doing derivatives in uni, the easiest was drawing on a strike and profit graph. I hate those. I don't think that they work with people to help them understand most of the time. I'll come up with a better explanation. But for right now, I'm going to print this out and you're going to have a fucking cheat sheet. Okay. So we're going to keep combining them. Then we're going to long call. We have a short put. We need a long put. Long put. Long put. A long put is a bet that it's going to go down. And what else do we have? We have one more combination. A short call. There we go. Because it's opposite, right? So, short call. There's the line. Yeah, we got it. A short call is a bet that it's going to go down. Yep. Double negatives are positive. There you go. If the error go, we tried. Macrovest, hi! One way I remembered, I can call you up and buy those shares at the strike. I can sell these shares to you at the strike. I'll come up with a better example. But yeah, that's kind of how I explained it. I tried. It's kind of a shit explanation because I didn't really think it through before I did it. But I bet I could put these all on a Vizio and do every single spread. I think that would be really valuable. I hope you guys enjoyed this excerpt from our live stream. Again, you can totally follow in the description, watch our live stream. Also, the description includes a free resource about calls and puts. I'll see you there.